Hi, I'm Tony Constantine, an investment advisor representative with LifeMark Securities Corp. As I look out at investor behavior today, I see some zany things going on. It seems like people have forgotten what investing is and what it's all about. So today I want to talk about investing. What is it and why do we do it? You see, when I look at investor behavior, I see people doing things that don't make a whole lot of sense a lot of times, and I have to wonder whether they actually know what they're doing or not. And I'm talking about some very smart people, or usually smart people. So let's talk about investing. What is it and why we do it? And we're going to keep it very basic and very simple. We're not going to go into extraneous explanations that aren't really necessary for our purposes. See, when you invest, you're buying a share of a company. Now, that share could represent 10%, or it could be worth 1/1,000,000th of a percent of the company. Depends on how many shares are outstanding. That means how many shares are owned by individuals. Companies do keep some stock in their treasury in case they want to sell to raise more capital. But that's a whole different discussion. When you buy a share of stock, you're taking an ownership position with that company. Now you have limited rights to ownership. You get to vote for the board of directors and some of the general things that happen, and that's it as far as your owner's rights. But you also have the right to resell that stock if you want to on the secondary market, the stock market. You also have the right to expect dividends if and when they're paid. Now, many people will buy stocks just for the dividends, hold on to them, collect that money, and spend it as they want to because it's their money, and hopefully participate in the appreciation of the stock going up in value over time, and being able to resell their shares on the open market. Another way to invest is to buy a bond. Now, when you buy the newly issued bond, you're paying $1,000 to receive a stated interest rate for a specified number of years. You have the right to sell that on the secondary market as well. And, if interest rates are lower, you're going to get more money because you've got a higher interest rate bond. Or if interest rates go up and your bond is a lower interest rate one, well, you're going to take a little hit on the principal of the bond and receive less for it. So the reason why we invest is to make money. Basically, initially, we're looking for the income stream. After that income stream, we're looking for appreciation. Okay? Please don't lose sight of that because it's very important to remember. We are looking for appreciation of price and dividends or interest. Either or, depending on what you buy, bonds or stocks. Okay, and when you lose sight of that, when you start buying stocks for exorbitant prices of companies that are not making money and obviously not paying dividends, what are you doing other than speculating? You can do that in Las Vegas or Atlantic City. You don't need to sit home and buy stock on the stock market in your 401k on speculation. And most people, truthfully, cannot afford to do that. Now, if you think you have lost perspective on what investing is all about, as far as you're concerned, you can call me and we can talk, or drop me an email. My contact information will be on screen momentarily. Come back next week for our next exciting adventure in investing. Until then, make every day a great day.